Hello everyone and welcome to another accounting lesson. Today we will be doing some accounts classification into the respective accounting elements. So let's begin. Okay, first up we have repairs. Okay, repairs is a form of a cost to a business and the business can be repairing anything from their equipment or their vehicles. And since this is a cost to the business, we would consider it as an expense. Next, furniture. This is a resource owned by the business, and the business can use this item to generate some income when they use it in the business premises. So it's an asset. Okay, third account in this list is sales revenue. As mentioned, this is the selling price of goods that the business had. So basically, it's a form of earning of the business, and we would record it as an income. Okay, let's move on to a few more. Advertising. Okay, advertising is a cost to a business, and businesses normally would advertise to get customers. So since it's a cost to a business, we would record it as an expense, or we would classify it as an expense. Okay, next up we have this account here called a trade receivables. Okay, trade receivables simply means the business will receive money in the future due to trade reason, which is business has sold goods to a credit customer. So this is a form of a benefit to a business that will come in the future when the customers pay what they owe to the business by cash or check. And we would consider this as an asset. Okay, moving on to a long-term borrowing, which is also known as a bank loan. Since this is it's an owing to the bank. Okay, it's an obligation by the business to other parties, and it's a liability. Okay, moving on. Next set of accounts. Okay, inventory are goods the business purchase for resale purposes. Okay, and these are resources that the business own, okay, for temporarily before they sell it to customers and collect cash from the customers. Therefore, it's an asset. Premises are the place where the business operates. It could be something that the business use for their site to get customers, etc. And since this is a resource owned by the business, we would count it as an asset. Okay, premises work similar to accounts such as buildings. Okay, it's basically a place that is owned by the business. Okay, next up we have cash at bank, which is money kept in the business bank account. So this is something that the business owns, therefore is an asset as well. Alright, moving on. Next item on the list is a payable. Again, let's break it down. It means the business will pay in future to someone due to trade reason, or simply put, the business will pay to a credit supplier because they have bought goods previously. So we would term this owing to the supplier as a liability. Okay, next up is cost of sales. So in the accounting knowledge, cost of sales means the cost of the goods that were sold. And cost of sales will only be recorded at the time of sale of goods. This is a little bit tricky, but based on our accounting recording method, we would record this as an expense. Alright, next up, wages and salaries. So from the business point of view, the business would need to pay the workers for working in the business. So we would term the wages and salaries as a cost to the business in order for them to sell goods and make profits, or provide services and make profits. Therefore, wages and salaries form part of the cost of a business, and we would term them as an expense to the business. Okay, so from this point of view, we are looking at the business paying to the employees. Okay, final three accounts for us to consider. Okay, discount received is something that you will learn probably later on in the syllabus. Okay, it is a form of earning to the business because they have decided to pay the supplier earlier, so the business has a form of income in that sense. Okay, equipment are what the business owns, so it could be anything. What we have equipment could be things like, let's say, electronic items, better term as office equipment. Okay, or if you just look at things like equipment, it could be things like conveyor belts that the business have. Okay, and finally on the list of account we have stationery. Okay, stationery is a cost to the business. Okay, basically it's something that the business will use, and based on uh, an accounting theory called materiality theory, which you will learn in greater detail subsequently in the syllabus, we would record or classify stationery as an expense. Alright, so it's important for us to know how to classify accounts, because subsequently we would need to know whether to increase or decrease these accounts when transactions happen, and we would assign debits and credits accordingly. Okay, but that's for a subsequent video. Alright, I'll see you in the next video.